So let's talk about Michael Saylor. This guy, the CEO of MicroStrategy, has made one of the most audacious bets in corporate history. And it's not just on crypto in general. No, he's gone all in, and I mean all in on Bitcoin. In this explainer, we're going to dig into the why. What's the logic behind his billion-dollar gamble? And why does he believe diversification is, well, for losers?
Okay, so just to get a sense of the scale we're talking about here, look at this number. We're talking about over 120,000 Bitcoin. That's what MicroStrategy, a public company, holds on its balance sheet. I mean, that is just an insane amount of concentration in one single asset. And, that immediately brings up the big question, right? In a world with literally thousands of different cryptocurrencies, all promising to be the next big thing, why would you bet the entire farm on just one? It seems crazy on the surface, and that's the puzzle we're here to unpack.
All right, so Saylor's whole strategy, it really starts with this simple, almost brutal idea about how technology markets actually work. He doesn't see this happy little ecosystem of competitors. Nope. He sees a battlefield where there's only one winner.
And this quote, this really gets to the heart of it. Investing in the winner is better than diversifying across competitors destined to fail. I mean, that just flies in the face of everything you learn in Investing 101, doesn't it? For him, diversifying in crypto isn't smart, it's just making sure you own a bunch of stuff that's going to zero.
And he's got this great analogy to drive the point home. He basically says Bitcoin is like Facebook in the early days of social media. So ask yourself, would you invest in the clear market leader, or would you put your money on social network number 100? For Saylor, buying an altcoin is exactly that. It's betting on the 100th best social network. It's just a bad bet, statistically speaking.
So you got to understand, he sees 99% of these other projects, these altcoins, as basically failed tech companies. It's not a field of dreams, it's a graveyard of startups. So when he looks at diversifying into them, he's not thinking, oh, I'm spreading my risk. He's thinking, why would I deliberately buy a bunch of lottery tickets that are almost guaranteed to be worthless?
But it gets deeper. His argument isn't just about picking the winner. He thinks we're fundamentally misunderstanding what these things even are. And this next part, this is absolutely crucial to his entire worldview.
Okay, so for Saylor, Bitcoin is something totally unique. He calls it digital property. Think of it like digital gold or a plot of land in cyberspace. Its main job, its only job really, is to be a store of value that everyone in the world can agree on. And here's the kicker, in his mind, no other crypto even comes close to fitting that description.
So you might be asking, well, if the other coins aren't digital property, then what are they? He calls them security tokens. And what he means by that is that they're basically stock in a tech company. Buying an altcoin is like making a venture capital bet on a software project. And, most startups fail.
This table really lays it all out perfectly. Look, on one side you've got Bitcoin. Its function, a store of value. Its risk, the lowest in crypto. The analogy, digital land or gold. Then on the other side you have all the altcoins. Their function, basically tech company stock. The risk profile, super high, just like any startup. The analogy, a VC bet. For him, these aren't just different flavors of the same thing. They're two completely different asset classes.
Okay, obviously, when you hear about a strategy this intense, a million red flags about risk pop up. So let's just address the two biggest ones right now.
Right, first up, the whole all your eggs in one basket thing. Isn't this just incredibly, insanely risky? I mean, it goes against every piece of investment advice you've ever heard. But here's where Saylor just flips the whole argument on its head. He says, no, that's not the real risk. The real risk is knowingly buying into thousands of projects that are probably going to fail. For him, the risk isn't being concentrated in the winner, it's being diversified across all the losers. Okay, fair enough. But that brings up the next obvious question, right? What if you're all in on Bitcoin, and then Bitcoin itself has a massive crash? What then?
And his answer to that comes down to the numbers on his company's balance sheet. See, MicroStrategy has about $6 billion in assets, but only about $2.2 billion in debt. That huge difference gives them a massive cushion. They can ride out even the craziest crypto winters without ever being forced to sell at the bottom. So that's kind of the defense, right? That's how he justifies the risk. But now let's talk about the offense. What's the massive grand vision that makes him willing to take such a huge bet in the first place?
His whole bullish case really boils down to this. Bitcoin is just a better, upgraded version of poverty. I mean, think about it. It's way easier to manage and secure than a pile of gold bars or a building. You can send it anywhere in the world, instantly, especially with things like the Lightning Network. And get this, securing $5+ billion worth of it isn't any harder than securing $5 worth.
It's just a total upgrade on the idea of ownership. And here's a great way to think about it. Just imagine the absolute nightmare of trying to move $5 billion in physical gold from, say, the US to Tokyo. The guards, the planes, the insurance, it's a mess. With Bitcoin, that's a few clicks. The value is transferred in minutes. It's not even a fair fight.
So where is all this value going to come from? Well, target number one is the OG store of value, gold. The entire gold market is worth something like $11 trillion. Saylor doesn't see gold as a competitor. He sees it as $11 trillion of capital just waiting to be upgraded to the digital age.
But hey, why stop there? That's just the start. Look at the global bond market. This is where people have parked their money for safety for decades. We're talking about a staggering $130 trillion. To Saylor, that's another old-school asset class that's just ripe for disruption.
And then there's the big one, real estate. Every building, every plot of land on the planet. The estimated value, a mind-blowing $220 trillion. This is the scale of the game Saylor thinks he's playing.
So here's the bottom line. Saylor's grand theory is that Bitcoin, because it's just better property, is going to act like a financial black hole. It's just going to slowly, steadily suck in value from these massive, old analog markets. And that really leaves us with the final big question. You add all those markets up, gold, bonds, real estate, you're talking hundreds of trillions of dollars. So what happens if he's right? What if Bitcoin captures just 5% of all that value? Where does the price go then? It really makes you think. What if the guy who made this massive billion-dollar bet is actually right?